class, we're now going to go on to the next financial statement, which is the statement of retained earnings. We've talked about the balance sheet, we've talked about the income statement already. Now we're going to talk about the statement of retained earnings. Retained earnings, remember, on our balance sheet we had assets equal liabilities plus owner's equity. And remember, within owner's equity, you had the capital stock, but you also had retained earnings. And that's what this is. This is the retained earnings within the balance sheet. Okay, but we're just showing the calculation of how we get to that ending number. So let's go through this. Retained earnings are those profits retained within the company year after year. So we're going to start our retained earnings at the beginning of the year. Now I just put down January 1st, but whatever the beginning of the year is for the corporation. But most of them have January 1st start dates for their years. So I put down 1,100. Now remember that with financial statements, oftentimes, they're millions and millions of dollars, okay? We're not going to put all those zeros on here, okay? We're going to cut off some zeros here. So there could be 3 zeros there could be 6 zeros. It'll tell you up above when it has the title for the financial statement, whether this is in thousands, and if it's in thousands, you'll see comma 3 zeros. If it's in millions, it'll tell you it's in millions, okay? So this may be in millions of dollars, it could be in thousands of dollars. You have to look and verify what this is. So anyway, I just put down that it's 1,100 for now. Then the net income belongs to the owners. So that's part of their retained earnings. So the net income from the current year, just the current year, gets added in because previous years are already in that number. So the current year net income from our income statement would be $500 I put down here. So now we have a subtotal of 1,600. The next step is to subtract out the dividends. So I say less dividends of 200. Now dividends, that's the money that's paid out to our shareholders, okay? Money is oftentimes paid out for the shareholders every year. So it's distributed back out to them. And we call that a dividend. Now, a lot of times students think that dividends are expenses. Well, they're similar in that they're cash paid out, but they're not expenses. We call them dividends, and they're never put on the income statement. So make sure you don't make that mistake, because that's a very common mistake. Dividends are distributions paid out to the shareholders, and it's always recorded in the statement of retained earnings, okay? So that was 200. Now remember, this is a reduction, so we're going to subtract that from the 1,600, and we get $1,400 left over. So our retained earnings at year end then are $1,400. Now where's this going to go? Okay, remember at the beginning of this video I said that this goes on the balance sheet. So you'll see this dollar amount now on your balance sheet under owner's equity within retained earnings there, you'll see $1,400. Now you'll notice that there's articulation here, there's tying in of the financial statements. This number here goes to the balance sheet. This net income here, where did it come from? It came from the income statements. So there's a relationship between these financial statements, okay? And over time, you really need to start trying to understand what that relationship is and understand these financial statements in more detail. So right now, it's really important that you get down these concepts of the balance sheet, the income statement, the statement of retained earnings, how they relate to each other, the different types of accounts, and their format, okay? So that's really important in this chapter to get these kind of concepts down. All right, good luck. Thank you.